Greetings. Welcome to my weekend market recap, 5th February 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems to carry out the complete 360 degrees analysis on stocks and market. They run as add-ons to the TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. Start with a look at the global market. First, Australia's All Ordinaries. Now, if you look back, when price came to the upper edge of the sideways range, it created false upside breakout at the watermark resistance levels and displayed the bear release reversal signals. That time I suggested in live market analysis that we could short all ordinaries with the preferred instrument of short call vertical. That turned out to be very profitable as all ordinaries sharply fell down. Then price has recovered. What is the current diagnosis? It is nearing the trendline resistance and also the watermark support, which may now turn into resistance. If price can break out of both the watermark level, pivot level and the trendline level, then it will be bullish. However, for all ordinaries itself, it will be far away from the recent swing low. We may not find low risk buying opportunity at that point. However, if the breakout happens, we may find buying opportunities in individual stocks. On the other hand, if price comes to the trendline resistance and watermark resistance and it tilts down, that will give a trend following short setup in the all ordinaries. And at that time, we may look for shorting opportunities in individual stocks. Currently, we don't have any trade setup. What is the direction of all ordinaries? It is downtrending because we clearly have lower highs and lower lows. Next, a look at the Japanese market using Topix index. What is the direction? It is also downtrending, lower highs, lower lows. It is in a pattern similar to Australia's market. It came to a swing low, displayed the bull release signal, at which point jump and thrust showed extreme downward extension. A recovery was likely and the recovery took place. Price now came to the watermark support which may work as resistance. If it goes up, we don't have a low risk entry opportunity in Topix index, but you may find buying opportunities in individual stocks. On the other hand, if it tilts down, you will likely find lower risk shorting opportunities in individual stocks. At present, we don't have any trade setup, but it is downtrending. China market. no change from the previous week. The entire week, China market was closed due to Lunar New Year holidays. So we have the candle from 1 week ago, and that was looking bearish. No change. The market was closed for the entire week. UK's Footsie index. In the last webinar, I mentioned that it was uptrending because we had trendline support and no trendline resistance. At the same time, I pointed to at that time, two bearish indecision at the top and said that it was not the time to buy many stocks because of the two bearish indecision at the top. And now we have three bearish indecision at the top. Therefore, I will be very reluctant to buy in the UK market now, and because trendline support is not very far, I will be reluctant to short as well. Still uptrending, but no trade setup. Nifty 50 India inside a range. And what do we do when price comes to the lower end of a sideways range? We look for some bullish reversal signal, bullish indecision in this case, and we could start to buy individual fundamentally strong stocks. As Nifty 50 went up, those stocks would have performed most likely better than the index itself, and we would be able to close the swing trades with profit. Now it is right in the middle of the sideways range. That is a no trading area. Sideways market, no trade setup at present. Now if we want to look at the overall global market view, now I have created a global index, custom global index, that is comprised of the markets that I study in every market recap, that is Australian market, Japanese market, China, UK, India market, that will give an unambiguous reading on what is the global market doing. Global market ex North America. That is moving sideways, no doubt about that. It's range bound, moving sideways, right in the middle of the sideways range. That is a look at the global market. Overall sideways, and there is no trade setup in any of the global markets. Now let's have a look at the USA market, starting with Nasdaq ETF QQQ. I mentioned in that tweet that market may not have any directional bias right now. It's very indecisive, and we see that from QQQ. The weekly candle color is bearish. In all Q systems, red magenta means bearish, green cyan means bullish, yellow is neutral. Weekly color is bearish, but the shape is indecisive. And we have previous week's candle with long lower tail, this week's candle with long higher tail. 2 weeks together is also very indecisive. In the daily, it is bound by trendline resistance and support. Because it is close to the trendline support, we are not able to short, and we don't have any buy setup using the Q techniques. Indecisive when you combine weekly, daily together. What about SPY? Once again, this week's candle is indecisive, and if you combine the 2 weeks candles, then it is even more indecisive. In the daily, price came down, then it recovered. Now it is at the watermark pivot price level, which was support before. Now it may act as a resistance, and we also have a trend line resistance at the same level. This is looking very similar to the Australian market and Japanese market. If it breaks out of the trend line resistance, that will be bullish. On the other hand, if it tilts down, that will give probably many low risk shorting opportunities in individual stocks. Currently there is no trade setup. Indecisive trend is downtrending, lower high, lower low. Same was true for QQQ. Dia, this is not downtrending. If you look at the weekly chart, it is moving sideways for a long time. And when it moves sideways, again, what is our trading strategy? Short the top, preferred instrument, short call vertical. Buy the bottom, preferred instrument, short, put vertical. We could keep on doing that every time, take low risk, and as it happens in this case, all the 4 trades that I pointed just now, they all turned out to be profitable. Now if you look at Friday's candle, that is very indecisive. The weekly is also indecisive. So there is no directional bias, sideways, but no trade setup at present. Lastly, Russell 2000 IWM ETF. This is downtrending, lower high, lower low. It is the weakest of the 4 market ETFs. However, Friday's candle itself is indecisive. This week's candle is indecisive. Previous week's candle was also indecisive. So all the 4 market ETFs are indecisive. That is why I am not able to establish any directional bias. Now let's go back to SPY chart. I wanted to point out something. Right on this day, on an intraday basis, when price was near the lower half or lower end, that time I tweeted about the possibility of market finding the bottom. I reinforced that comment on this day, and then price recovered enough. So if we traded using the preferred instrument short put vertical, that gave a nice profit by the time price came to the trend line resistance. Now when it was at the trend line resistance on that day, not after the drop next day, what did I tweet? Let's have a look at that. In the morning session, February 2nd, the SPY daily chart was still bullish in color. This is in the morning session, 10:27 a.m. Eastern Standard Time. But looking at the trend line resistance, and I also noticed the declining volume, which is not abnormal, which is quite normal. I looked at the declining volume as price was going up, and if you notice the candle shapes, they were becoming narrower and narrower. The upside momentum was reducing, both in terms of displacement, also in terms of volume. Then it came to the trendline resistance, price was still up. It came to the watermark support, which could act as resistance now. I looked at all that, and then I commented using live analysis that, are you looking for a V-shaped bottom? Many people were talking about that, and I categorically mentioned without ambiguity, no ifs and buts, I am not. And I mentioned the probability is low until we see the AutoSmart trendline resistances are broken in SPY, and Dia also had a similar situation. That was before knowing the result on February 2nd. And this is how February 2nd closed. Next day, it displayed a bear release signal. The traffic light candle color turned bearish, and then we have a bearish or indecisive shape, not bearish, indecisive shape candle on Friday. So it was very accurate analysis that could help us book profit on a bullish day in long positions without waiting for the sharp drop next day. That is how we can use the unambiguous signals, color coded signals in Q systems to perfectly catch the bottom and book profit at the swing high. Again, perfectly, at least so it appears as of now. Market ETFs are looking indecisive. What about market internals? This is a very powerful breadth analysis, total view that is calculated on two composites and four major indices. On Friday, we have an indecisive candle in this candle chart also. What is this candle chart? It is a composite index created from, again, these two composites and four major indices. That is also telling market is indecisive. On Thursday, we had a heavy selling day, Phoenix day. It was designed by Ian Woodward. May him rest in peace. I am starting to incorporate these signals in my market bias decision. So we had a Phoenix and we also had heavy distribution count on Thursday. The distribution came from Nasdaq Composite, NYSE Composite and also Nasdaq 100. We had heavy selling on Thursday. Friday was indecisive. If we look at this candle chart, it is also moving inside a range, inside a box, and it is right in the middle of the range. That is also a no trading area. If we look at the 3-month new high low, it's in the lower half, that is bearish, but not at the extreme low level. So we are not expecting a reversal from that angle. If we look at the percentage of stocks above 50 MA, yellow line, it came to the red line, that is 20% level, and I mentioned at that time, all these analysis I do before knowing the result, and I mentioned whenever it comes to the 20% level, I look to buy stocks, fundamentally strong stocks, giving proper Q trade setup, and indeed price went up from there. So we could again apply the live systems to make trading decisions. Now we are not having any signal. It is below the midpoint, so it is bearish. The yellow line is coming down with lower high, lower low. That is also bearish. Bearish, but the candle chart itself is indecisive. We don't have any trade setup. Between Nasdaq and NYSE, Nasdaq had been weaker for a long time, and that is continuing. This is a closer look at Nasdaq and NYSE. I'll not read all the signals, but if we look at percentage of stocks above 50-day moving average, for Nasdaq, it is at the 20% level. For NYSE, it is at 35% level. So from this angle, NYSE is about 15% stronger than Nasdaq, and we are seeing this relative strength in NYSE for many months now. Nasdaq is weaker. If I look at the market mega caps, what is the direction? It is downtrending. We have trendline resistance, no trendline support. Somewhere here it broke the watermark support. So it was not moving sideways since this time. Earlier it was inside a box pattern. Then it broke the support. Price recovered, came right to the trend line resistance and stopped there. Not unlike SPY, not unlike Australia's all ordinaries. Why I am mentioning that is to show that the same pattern can be applied to individual stocks, market ETFs, global markets, and also composite indices. Friday's candle is very indecisive. We don't have any established market bias from this also. That's why I mentioned in the tweet that we don't have any way to establish market bias from the technical analysis. We have some other analysis. We don't use only technical analysis. Let's look at them. Let's look at the very useful sector industry stock advance decline from 1 month to 1 day. If we look at Friday's performance, it is very indecisive across the sector analysis, advance decline, industry, and stock, very indecisive. 5-day period is bullish. 10-day period is also bullish. However, 1 month is very bearish. 1 month is bearish. This is the time market dropped sharply. Then it recovered somewhat. 5 and 10-day periods. And on Friday, we have very indecisive day again. So we are not able to establish any directional bias from here. Let's have a look at the bucket analysis. It is bearish because the red bars are more to the left half than the green bars, the bigger in size. The red bars are bigger in size than the green bars. And we can also see from the pie chart, 70% of S&P 1500 stocks are below their mid Bollinger Band. It is bearish, but the lowest bucket, less than 1, that is percentage of stocks below lower Bollinger Band, that percentage is nowhere near 30-40%, is just 4.1%. Now see the value of the bucket analysis and especially of that in real time. When the percentage of stocks in the lowest bucket in real time hit about 60%, I tweeted at that time that we may expect a recovery. And indeed that recovery happened. Some stocks must have recovered. Otherwise, the lowest bucket percentage cannot come down drastically from about 60% to 4%. Some stocks must have recovered. Recovered from where? Recovered from below Bollinger Band. That means what kind of trades could we expect? Trend following? No, those would be reversal setups, and Q indeed has multiple reversal setups for different market conditions. Bounce setup for existing condition, box setup, sideways market, and headwind, a trend reversal setup. We could take those reversal setups right when the lowest bucket percentage hit 60%, and we wouldn't have to wait for others analysis, others view of the market. Will the market recover or not? We didn't have to do that. We just had to find low risk buying opportunities using Q reversal setups, and those would have worked very well because the percentage drastically came down from 60 to only 4%. Did it turn bullish? No, because we still have 70% of stocks below the mid Bollinger Band. And in fact, in the tweet where I mentioned I was not expecting a V-shaped recovery, I pointed to this percentage as well, showing that overall market was bearish. It was a recovery from below lower Bollinger Band to somewhere close to mid Bollinger Band, not even to the mid Bollinger Band, below that, but somewhere close to mid Bollinger Band. So it was downtrending. What it means that if market goes down, we'll have easier shorting opportunities. If market goes up from here, it has already recovered somewhat, we may not find easy buying opportunities. Overall, the bucket analysis is not helping us decide any directional bias. What about technical breadth? the balance between bulls and bears using your own trading universe. And I am using nowadays very liquid stocks, 500,000 shares traded per day at least, and price range 10 to $110, mid price stocks, liquid stocks. The weekly picture is bullish. This is in sync with what we saw in sector industry stock breadth analysis as well. Weekly picture is bullish across all categories. What about daily picture? Daily picture, if we look at all signals, it is also indecisive. Again, in sync with what we saw from technical analysis on Q Global, and also in sync with sector industry stock advanced decline breadth from Q Edge. Now, what you can also notice that strength signals were largely bearish, and then we had reversal signals largely bullish. Together, we interpret it as a bullish provided the reversal signals are comparable to the number of gap downs, which is not so in the case. It is about 1 is to 2, slightly less than that. So in this case, I will say recovery is possible, but it's not clearly bullish that we had large number of bearish strength signals followed by large number of bullish reversals. It's not exactly bullish in this case because of the difference in the number of bearish gaps and bullish reversals. Still, we have some bullish reversals. We could look for reversal trade setups. We could do that. We could look for both bullish and bearish trades because the market is indecisive. All signals is indecisive. So we are not able to establish any directional bias from this angle also. What to do in such a situation? One thing to do is probably possible thing to do is to stand aside, wait for the market direction to be clearer. Another approach that is very valid approach would be to look for both bullish and bearish trades, create a watch list and take the trades only in the direction of the market. So if we identify some possible bullish bearish trades, if the market goes up next week, we'll execute only the bullish trades. Let's try to look for some of those trades. But before doing that, let me highlight some of the simplifications that I am carrying out now. From time to time, I look at the Q systems and ask myself, what could I eliminate without affecting my PNL? And how is my PNL? In terms of success rate, that's always good to look at sometimes. I have a way to show the visual success rate in one of the India brokerages that I am using. This is a snapshot after 1 year of trading. The account was opened in February 2021. So there were some trades taken in February also. This snapshot can go only back up to 1 year. So this is the snapshot. And as you can see, the green colors indicate days where trades were net closed with profit and red colors net closed with loss. From that criteria, the success rate was very high, and I must have made some profit with that kind of success rate. Now, if any of you are trading in the India market as non-resident, like I am, then this broker is very known broker, probably the largest broker now. They have a nice platform, easy to trade. However, as non-resident Indian, I paid very high commission. I made good profit, but I paid 17% of my gross profit as brokerage without over trading. And of course, I didn't over trade. That is visible from the many blank days where I didn't take any trade. any blank days, or I didn't at least close any trades on those days. So I am now shifting to a different broker where the commission will come down by 1/3. In any case, the success rate was very high. Why I wanted to share this, that because I am shifting to a different broker, I will not be able to share this kind of snapshot going forward. Now you can see, though the India market went in uptrend, sideways, downtrend, my success rate was consistent across all the 12 months. What it shows is that using Q techniques, because we have trend following setup, pullback setup, and different reversal setups, you are able to find trades in any market condition. And by the way, in that account I showed I am allowed to trade only stocks and only in the long direction. So that means it is possible to trade only stocks, only buy stocks, never short stocks, and still make reasonable profit. I never say that you can make a huge percentage profit, especially not when you are just beginning to trade. But it is certainly possible to make profit. That's why I say no reason not to make some profit trading in the market if we are disciplined. Having said that, let's go back to the few simplifications. On Q Finder, this data came from Metastock Explorer scans. Earlier, we used to have one bearish scan, one bullish scan. We could run any one of them. If you are only looking for bullish trades, you could run only the bullish scan. However, to look at the technical breadth, we had to run both of them. Now, it was not a problem, but I decided to simplify. So you can see now there is only one finder scan. You can run it like I have run, copy the data, go to Q Finder, click the import from Metastock Explorer button, and you will see that both these timestamps will be updated at the same time. We have only one scan now, and now you will get the technical breadth with a single scan and single import. That will simplify the workflow. Also, as I mentioned, I have added tooltip style help messages in all the QDives programs. If the help color is black, then it will carry out the operation without showing any help message. This is a toggle button. If you change it to green and click any of the action buttons, it will show the tooltip but not carry out any operation. That is to be familiar with all the buttons on a page. So if I click this button, it says go to Q Vital. This is the tooltip help message. If I click this button, go to Q Edge. But it is actually not going there. That is to be familiar with the buttons. And if you toggle the color once again by clicking the help button to red, now it is going to show the tooltip as well as carry out the operation. So if I click this button, green bullish button, it's telling go to the bullish tab, and if I click OK, it's actually taking me to the bullish tab. Once you are familiar with all the buttons, you are conversant with them. I think all of you are conversant with at least the buttons you use at present. Using the help message, you may start using some of the other integration interlinking buttons also. Once you are conversant, you may turn it off to black color. I have completed this tooltip implementation across all the systems. You have this for Q Edge also. Now coming to Q Edge, you can see I have simplified the structure. At the bottom, we used to have different tabs for sector scorecard as well as sector percentage, industry scorecard and industry percentage. Now I have combined the sector percentage, industry percentage in a single tab. That speeds up the operation. That is another simplification that I carried out. Now coming to the technical charts, here also I have carried out some simplification, eliminated some templates that we were not using, they were not affecting our PNL. That was the criteria I used when eliminating things. Will it affect our PNL? It wouldn't. So I eliminated some and I simplified, combined some of the templates. Let's show all the templates. Let's open this stock. I shared a bearish idea on this stock yesterday. SKT Tanker Outlet. I'm opening with smart chart default template, but let me explain the different templates. Backdrop template remaining same as before, and I will also read out the signals from all the templates for this stock on which I had a bearish idea that I shared on Friday. Backdrop color bearish in weekly chart, shape is very bearish, relative performance tilting down, next support is far away. See how I am analyzing and looking for trades with unambiguous colors. This is backdrop template, same as before. Let's go to the entry template. What did I see in the entry template? Bearish flow. It is below lower boundary. Usually I don't take short trades below lower boundary. However, this stock technically as well as in terms of fundamentals and industry strength was looking very bearish. Friday it closed right at the low of the day, dropped with bearish pressure, very high bearish volume. Next support is far away. So I decided to share a shorting idea. Some of you may have the alternate signals, HSI like signals. That is the momentum signal chart. Not all of you have it. It is not strictly speaking my system. I just offer it to people who were already using HSI. There is no separate fee for these additional charts. Bongo is red color, that is bearish. We have a bearish pocket pivot on Friday. There were not many momentum signals, but that is fine. My trading decision, entry decision is based on Q signals. I just read out the additional momentum signals. This is also looking bearish. Then I have now a support resistance daily chart. This is similar to entry chart. Why I created it is I wanted to have a template without the band indicators. Why I wanted to have that is to give more space to the candle chart. As you have seen, all the Q templates try to give more space to the candle chart so that we can see how price is moving. That is in my view most important. We can have a look at indicators. Q charts don't have many indicators other than the band indicators that tell us about what is going on, but it is okay to have indicators. I have seen in some traders charts the candle chart portion is very narrow. For me, that makes it difficult to read how price is actually moving. So one reason I created this support resistance chart is to eliminate the band in the middle so that I have a clearer view at the candle chart, and I use it for intraday time frame as well. For example, if I am looking at multiple market ETFs at the same time, I may use this template. I don't need to use the bands. I'm just keeping an eye on the market ETFs, so I use it for that purpose also. Use the support resistance chart without the band indicators. So I don't use the entry template. Nowadays I use the support resistance. Next, the price extreme chart. It used to include the price extreme color. That was an extension indicator, and the jump and thrust indicators were also extension indicators. So I combined them into a single extension chart. It is very clear to see where it is in terms of price range. For this stock SKT, I can see it is in the mid price range, neither price extreme high, and we don't have price extreme low color in this display area, and it is at jump and thrust low, so it has come down significantly in terms of jump and thrust. But still, looking at the candle chart, it was looking so bearish. I decided to take a short trade in SKT. I actually shorted it. So extension daily chart, then the volatility chart. This is as before. The candle color shows the volatility, and the squid like pattern shows the volatility squeeze. It is currently in a some sort of squeeze. And lastly, the stop level chart, protection signal. Using this, my stop would be at the cyan dots if I shorted it on Friday, which I did. This is used to decide the stop level. So now we have one backdrop chart, one entry chart, support resistance, extension, volatility, and stop, these chart templates. And some of you may have the alternate momentum template. So this is another area where I simplified the Q systems, and the same simplification was carried out on Q Elite on TradeStation also. That is something that I was busy with for about a month or so. I couldn't take the master class next session, but I will start with them again soon. Give me a bit more time. Now let's go back to Q Finder and look for some opportunities to get ready with them and take the trades only in the direction market is moving next week. Let's look for bullish trades, and we saw reversals were more. Let's look for headwind. There I can see 20 bearish, sorry, not bearish, bullish headwinds. Let's flag for them. I don't want to go through 20 charts, so I'm going to carry out a fundamental analysis, develop their scorecard, find out the weakest stocks, and then only look at their technicals. Or I could even look at their industries first, only focus on the stocks that are in weak industries, and then finally look at their technical charts. You could implement both of those workflows. It's retrieving data from Refinitiv. No data is stored on my computer, and when I carry out these Zoom webinars, also streaming on YouTube at the same time, it's slower than usual. That's fine. We can wait for a few more seconds. While we are waiting, let's look at another stock that I share. If you go to my website, sagarnandi.com, under 360 degrees trading ideas, I share live stock analysis before knowing the result. The last idea that I shared I just looked at that stock. I shared it on Friday. That was on SKT. Incidentally, SKT was a real estate stock. And the previous idea I shared was on WELL. That was a bearish idea as well, and that was also a real estate stock. Now let's look at, well, I think we can get some insight from that analysis, insight not only about the stock but about the current market situation. This is what I shared before knowing the result once again on 3rd February. Healthcare rates, it was one of the 20% weakest industries. You can know that from the checkered background. So the industry allowed me to short. Then I found a 3-star, what I call 3-star bearish candidate, overvalued stock with negative earnings growth. Fundamentally, it allowed me to short. Funds were not accumulating and 96% of PR stocks were weak. So we saw from scorecard that the industry was relatively weak. That is how we use the scorecard for industries, and from this pie chart we know in itself also the industry was very weak. Then I looked at the chart, and it's good we came here. I wanted to highlight something. You will notice both from this post on WELL, WELL, and also from the post on SKT, something that is the result of the current market situation. What is that? We can see here. The weekly color is bearish, shape is very bearish, relative performance tilting down. It was moving inside a range in weekly, and now it is breaking below the weekly trendline support. We can see in daily also the range bound by trendline resistance and support. When I shared the idea, it broke one trendline support. However, another trendline support was nearby. However, looking at the weekly, I decided to share the short idea and I did take a short trade. That means this was not one of the perfect setups that I like to use. But I had many bearish signals from industry, fundamental, technical, so I decided to share and take a short trade. How did it work so far? Let's look at it. Well, I shared the short idea on this day. Next day, it dropped significantly, and I can see it found support at the watermark support. It in fact hit the lower boundary level. So if you had a GTC order, you would have exited at least partial position. If the stock can go above this trendline support, then you may not want to hold the remaining position. You would exit it. Because overall it was still in a sideways range. I shared a short idea looking at preponderance of bearish signals, and that worked for me. But if it continues to go up, we still have significant profit in the remaining position. You will not let it go into loss. Now, what is the aspect I said is common between WELL and SKT? WELL was not the perfect setup I usually take. SKT, as I mentioned, it is already below lower boundary, not the perfect setup that I like to take. That is a result of the current market situation. It is not easy to find the ideal looking technical setup that I usually take. So I am taking some of those non-ideal setups, and I wanted to mention that. When we look at the trade setups today, try to identify them, we may end up with a similar situation. So we have the stocks now that have some kind of technical setup. Let's look at their fundamental scorecard. Look at least some weakness, either in terms of valuation or in terms of earnings growth. One star candidate. Look at the stocks that went up. Well, the stock that went up by 58%, that's not going to be a tradable stock. Stop would be far away. Let's focus on the other stocks. Now, I could open their technical charts, but instead of that, let me look up their industry scorecard. I am going to buy only in relatively stronger industries. And I prefer to buy in the top 20%, and only application software is here in that industry. So let me be a little more flexible. Let me choose, well, I have another way of choosing either top 20% score or top 20% acceleration. I'm looking at the acceleration from the pace column, again highlighting the cells where I have a checkered background, cyan color. So now I am left with three industries that are either among the top 20% performance or top 20% acceleration. Now let's go back and find the stocks only from these industries. See how the systems are linked. Now I am left with only four stocks. What are these stocks? Again, now with few mouse clicks with the integration with the Refinitiv live data, we found four stocks that have some kind of technical signal, headwind signal, that are in top 20% industries or top 20% accelerating industries, and that are fundamentally either having earnings. Let's click this. Okay, I may be left with very few stocks. Let me go back again. Left with few stocks. Okay, let me, I have to check what did I click, but let's open these few stocks. ST Sensata Technology. It is inside a range at the lower edge of the range, and there our preferred trading direction is bullish. Preferred instrument short put vertical. We do have a bullish headwind signal. That's what I looked for. The stock is at jump thrust low. That means a recovery is likely. However, Friday's candle itself is indecisive. So one way could be to buy it if the stock goes above Friday's high. Stop would be just below Friday candle's low. And we have significant upside potential, giving us more than one reward risk ratio. So we may keep an eye on ST Sensata Technologies. Next stock, HIMX. It came near the watermark pivot support that held for a long time. Also at trendline support displayed the bullish headwind signal. However, there is a trendline resistance not far away, so I'll avoid buying the stock right now. Next, Sun Power has a trend line support. The bullish headwind signal I looked for came to jump and thrust low. Recovery is likely, however, has a trend line resistance nearby. I avoid buying such stocks. So close this. So only Sensata Technologies. Let's look at that again. Let's look at it using the weekly daily at a glance template. Well, weekly also has a trend line support and a bullish indecision. Therefore, if price goes above Friday's high, we may be able to take a low risk buy position. Let's look at Sensata Technologies fundamental scorecard using one page. view. Again retrieving data, and here we can see visually immediately that the stock is fundamentally allowing us to buy. In terms of what? In terms of valuation. Undervalued stock, secondary valuation is also undervalued. Earnings growth is reducing and not very high in the last quarter. Last year's earnings growth is quite high. So we are allowed to buy in terms of valuation. The industry was mixed on Friday. That was the market view also. So we are finding one possible buying opportunity if stock goes above Friday's high, that is ST. Now I will carry out the same steps faster to look for possible bearish setup. Let's go to Q Finder again. Bearish signals. Let's look for, okay, here I am not going to select headwind or any kind of specific signal. Let's look at all the stocks that kept possible trade setup. I click this button to find stocks that had one or more trade setups. Again, I don't want to go through these 35 stocks. Let's check their fundamental scorecard. By the way, Sensata Technologies is a possible buy on Monday if it goes above Friday's high. But you see that is also not a perfect setup as of Friday's close. Didn't close near the high of the day. I'm seeing it's not easy to find the ideal looking technical setups that I usually like to trade. So let's look at the bearish side. These are the stocks I'm going to look for at least one bearish signal, either overvalued or negative earnings growth. Let's open these stocks. Okay, it's telling me to close all metastock charts so that I don't get confused about the previous charts and the charts I'm opening now. RWT did break below the trendline support. It's looking weak, lower high, lower low. However, it closed with indecision candle on Friday. I see bearish flow is also there. If it goes below Friday's low, it will give a valid short setup. I look at it using weekly daily later. Let's move to the next stock. This is a better shorting candidate. Gild, GILD. Why better shorting candidate? Because it has a very decisive bearish close on Friday, closing right near the low. It was inside this range for a long time, had a gap down move, feeble attempt to go up on Thursday, but closing near the low. We wouldn't short on Thursday. We could look at the stock on Friday, short it right when it was going below the trend line support. Could we find it? Yes, we could find it using Qscan in real time as a breakout candidate. We could short it at that time, and we are allowed to short at Friday's close also. Very bearish looking chart. I'll come back to it, look at it using weekly daily. Well Tower, I already shared a bearish idea on this based on Thursday's candle. I might have booked partial profit at lower boundary, and I explained a while ago, if it goes above the trend line support, I will not let it go into a loss for the position I am still holding. Close well tower. SEE, Sealed Air Corporation. This is also looking bearish. It had a bearish headwind at this point. Price came down from there, tried to recover, meandered around, then fell below this watermark pivot resistance. That happened on Thursday itself. Thursday we had bearish flow also. We would not short on Thursday because trendline support was nearby. That is decisively broken on Friday. Also we see a very important signal, big move 3 down on Friday at pendulum high. When big move 3 down comes at pendulum high, more often than not it leads to further price decline. So SEE is a possible shorting candidate. I look at it using weekly daily. MGY, this has a possible box short setup. However, there is a trendline support nearby. I am not so keen to short when trendline support is nearby. Let's close it. NOV also has a trendline support nearby. A possible box short setup probably, but I am not going to, no, sorry, it's a breakout setup because it broke below this trend line support, but there is another trend line support nearby. I'm not going to short it. NWL, that is looking very bearish. Once again, 3 big move down, not at pendulum high, but it is looking bearish. But I have better bearish candidates that are coming down from price extreme high with big move 3 down. So I'll close this. RWT is, as I mentioned, if it goes below, we are back to the first stock. If it goes below Friday's low, maybe a shorting idea, but I have better shorting candidate already. I'm going to close it. Gylid is a better shorting candidate. Let's open it with weekly daily. Yes, weekly is also breaking down below multiple trendline support. These supports work very well, and therefore when the supports are broken, that is also significant. Very clearly shows bearish signal. And Gylid has a bearish short setup. Where will be the stop? We cannot put the stop above swing high. Where is swing high? Here or here or here. We will not be able to do that. We may decide to short it. We could do that on Friday's close also. Decide to short it probably using the stop level. So we could look at the stop level that keeps us safe distance away. Using stocks volatility, we could put stop here. This is a wide range for some people, but that is fine for me. I'm looking for reward risk relationship, not the absolute distance between entry price and the stop level. So I'll be willing to short Gylid. But let's close the Gylid stock. We had another stock. Let's look at that. That was SEE. Let's look at it using weekly daily. The weekly is also looking weak. Broke below trendline support after displaying the bearish indecision. In the daily, it was inside a triangle created by trendline support resistance on Friday. We have a decisive close below the trendline support with big move 3 down at pendulum or price extreme high. So I like SEE as the best shorting candidate, and it is ideal looking also for me. Next shorting candidate is Gylid. Now, what we see from this live exercise, I didn't prepare for this stocks before. What you see that when we try to look for bearish candidates, we have more better looking bearish candidates than what I saw on the bullish side. Of course, I didn't look at all the possible bullish signals. There could be some ideal looking bullish trades, but I have a feeling that bearish trades will come more easily. At least that's what we see from this live analysis. Let's look at, I'll before finishing, let's look at these two stocks fundamentals with single page view. SEE. They are weak, we already know. Now I want to have more visual confirmation from the single page view. If you are deciding right before market close, don't need to do that. But now I have time. I am doing the exercise after market close, so I can review the single page view as well. This is SEE, paper packaging. Let's look at its industry again. One of the weakest industries. Only 13 scored and gradually coming down. Relative score is weak. Overvalued stock, secondary valuation also weak. Earnings growth, feeble, very feeble. 90% of peer stocks were weak. So SEE has a clear shorting possibility, and the other stock was Gilead, GILD. Let's look at that stock's industry, biotech. Biotechs can go down on its own. So here I can see biotech industry is actually improving, but that's fine. For trading biotechs, we may not rely so much on the industry. I'll be okay to short Gilead for its own weakness. And here I see the valuation is okay, undervalued, but high negative earnings growth, decelerating earnings growth. We can see that from the plot also. Revenue sharply declining as well, revenue growth. Yes, the industry is weak in its, not weak, strong. Relative score was also strengthening, but still I'll be able to short Gilead. Which one is a better shorting candidate for me? SEE. Why? Because fundamentally it is weak, industry is weak, and technically it is giving the big move 3 down move at price extreme high. That is a lucrative shorting point. That's how you can use these live integrated systems to find trade candidates both in the bullish side and bearish side in any market situation. We are beyond the 1 hour point, so let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next public session, which will be next weekend. As I always say, no reason not to trade profitably, as this example show. So let's all trade profitably. Keep safe and see you next week. Thank you.